Some simple ways for getting better at investing. First thing is fix your strategy and then get out of the way. This is one of the simplest and the best things you can do to grow your wealth. Create your investment discipline, your asset allocation discipline, and other, and finalizing everything else. And then once you start investing, stop tinkering with your original portfolio strategy and get on with your life. The less you do, the better you will be. Next point is think of the bigger picture. For too many investors, far too many investors focus too much on the individual investments in their portfolios. Yes, individual investments, individual securities, funds and asset classes matter in regards to your investment plan, but you have to think about how the broad portfolio is performing rather than these individual components, because these components ultimately work together and complement one another to give you a portfolio return. When adding any investment, you should think about how this fits within the context of your whole portfolio and not just the individual merits of the stock or the instrument where you are investing. Each piece of your portfolio should have a job, but these individual parts sum up to the whole. It is all one big pile of money. Your overall portfolio performance matters more than the performance of the individual securities or individual holdings. Another thing which you should do is track your performance. I have a love-hate relationship with the investment performance of the portfolio. Some investors obsess over short-term performance and benchmarks, they compare the benchmarks to their detriment. Long-term returns are only ones that matter, so who cares if you have a bad month or a bad quarter or a bad year? But this does not mean that you should stop tracking. Tracking performance is very important, especially important if you are actively managing some or all of your portfolio by yourself. You should absolutely track the performance of your stock to see if it's worth the time, effort, and the potential anguish. Save a little more money and invest every year. That is most important. The best alpha in your portfolio typically comes from saving more money and not the investments you make. It is the incremental investments which you make when the markets are bad that give you the extra alpha.